Hey, so good afternoon, everyone. My name is Hanspal, and in this session, we're gonna continue our sessions on financial management. Okay, so in the previous session, we tried to talk about the two most major objectives of financial management, or the two major goals of financial management, as we talk about. Okay, and we talked about the profit maximization and wealth maximization. And within the wealth maximization, we talked about two things: your capital appreciation and your dividend payments. Okay, so these things we talked about. Now, in this session, we're going to talk about the three most important activities of financial management. Okay, now what can be the three most important activities or three most important decisions in financial management that you need to understand? Okay, so when we talk about the three most important decisions or three most important activities of financial management, here we talk about, I'll write here, three decisions of financial management. Or three most important activities of financial management that you need to understand. The first scenario that we talk about is your investing decision or investment decision. The second decision that you talk about is your financing decision. And the third one you talk about as a working capital decision. इसमें तुम्हारा डिविडेंड डिसीजन भी आ जाता है. So if anyone asks you that what are the three major activities in financial management or the three major decisions taken in financial management. So here you have your investment decision number one, number two financing decision, and number three working capital or dividend decision. So now we'll be talking about in detail about each of these kind of decisions. Okay. So firstly, let's talk about the investment decision. So as the name suggests, investment, हम कहीं पैसा लगा रहे हैं, where we are putting our money into something. Now we can put our money like into the stock market, into your equities, bonds, commodities, forex, cryptos. So all these are kinds of investments. But for a company, your investments can also be in terms of purchasing your plant, purchasing machinery, right? Your building, your land, because ultimately the operations of the company would be carried on into these. You have to purchase a building and land or at least an office like for the purpose of manufacturing. Factory को rent पे खरीदना पड़ेगा, कुछ तो खरीदना पड़ेगा जहाँ पे you'll be carrying out your operations. Similarly, like you need to have a machinery on which you'll be carrying out your operations. Like for example, you might be into the production of biscuits, a fast-moving consumer goods, chocolates बनाते हो, biscuits बनाते हो. So again, for that purpose also, you need to have a machinery for that. Okay. So again, the machinery would have to be purchased for that purpose also, right? So again, investment decision basically involves any kind of investment that you are doing for the purpose of future returns. Now, these type of investments can be both the short-term investments and long-term investments. So firstly, let's understand the difference between the short-term investments and long-term investments. So whenever we talk about the short-term investments, it basically means the investments from which you are expecting a return in less than 1 year. Like for example, if on 1st January 2022, I purchased a machinery, so I want a return from that machinery before 31st of December 2022. I want my return from that. And in what form can I get the return? Like for example, if I purchase the machinery for 5 lakh rupees and that machinery is being used for the manufacturing of biscuits or chocolates. So ultimately the biscuits and chocolates which I produced on that machinery and sold in the market, my revenue from the selling of those biscuits and chocolates was more than 5 lakh rupees. Be it 5 lakh 50,000 rupees, be it 6 lakh rupees, be it 10 lakh rupees, 20 lakh rupees. Okay. So in this way, I can recover from my machinery. At least I can recover that amount and I should be able to recover more than that. Okay. So basically a short-term investment decision is when I am expecting a return from my investment from less than 1 year. And these kind of short-term investment decisions, which I believe are made for the mature companies or the companies which have achieved a growth because they have their products in the market and the demand for the products is more. and they can ultimately like recover that amount in a very short term period. But when we talk about the long term investment, your long term investment can is the scenario when you are expecting the return from your investment after 1 year. Like for example, if I purchase the machine on 1st of January 2022, I am expecting the return after 31st of December 2022 or after 1st of January 2023. So that is for the purpose of long-term investment. So long-term investment में क्या होता है? Like it basically happens in case of a startup companies as well, like which are initially the loss-making companies, and it takes 2 years, 3 years, 5 years, and sometimes 10 years also to recover that investment. Okay, but it is not mandatory that short-term investments are only used for the mature companies and long-term investments are only used for the startup companies. Even top companies like Reliance, Tata, HUL, they also make long-term investments. Okay, and the long-term investments are kind of expanding into some other field, making some new products or opening up some new factories or plant units. Like big kinds of investment they tend to do into this scenario, like when we talk about these companies. Okay, so that also like you need to understand. Okay, so that is one thing. So that was about your investment decision. And the main purpose of your investment decision is ultimately to get returns. And until and unless you do not get returns, it is not an investment, because ultimately for what reasons are you doing your investments? You are doing your investments ultimately to get some future returns. And if you're not getting the future returns, it cannot be categorized as an investment. Ultimately, you are like losing your money. And that is your investment decision. The second decision that we talk about is your financing decision. So financing decision involves like when you purchase that plant or machinery. So I'll be making it very simple for all of you and try to link those concepts like one after the another, and do not make it a separate concept to make you be like to make you feel confused and all. So like when we talk about the financing decision, so like for example, you purchase your plant, machinery, land, building, anything else. How did you purchase that? You purchased it by raising equity from the stock market or from private equity or venture capitalists, or you took debt in the form of bonds or debentures, or you took a basic loan from bank, or like you had your cash reserves or use your retained earnings. Okay. So basically when we talk about the financing decision, it talks about your sources of finance, that how exactly you raised your money. If you purchase your plant, equipment, so how exactly you purchase that? With which source of finance you purchase that? कैसे purchase करा था? Now, like if you are using your internal accruals or like retained earnings, so it's like best for the company ultimately, because the company like does not have to go with the hassles process, or go like with the process that involves hassles in raising the money from the market of equity. Because ultimately when you want to list your shares in the market, or like you want to come up with an IPO or maybe an FPO, IPO is the initial public offering when the company comes on the bourses for the first time to raise money. An FPO is a follow-up public offering or the following public offering when the company comes for the second time in the primary market only. Because when the company raises money in the primary market, it is almost an IPO only, and that money goes to the company only. And once the money goes to the public, to the company, not the public, then the shares are traded on the stock exchange in the secondary market, and then the money, it does not go to public. Like it is being exchanged, like it takes off from one pocket and goes to like some other's pocket. Okay, so that is a process, and in that process it can take a lot of time, because ultimately your SEBI, like which is the Securities Exchange Board of India, has to follow all the processes and procedures. कि वो like उन्हें कंपनी को देखना पड़ेगा, उनको देखना पड़ेगा कि कंपनी में कोई लिटिगेशन तो नहीं है, कंपनी खराब परफॉर्म तो नहीं कर रही, अगर खराब भी परफॉर्म कर रही हो तो डज द कंपनी हैज सम फ्यूचर पोटेंशियल, as in the case of loss making companies we saw, that platform startup tech companies, right? So these things we need to see upon. Okay, so if the company like is raising debt, so again the debt has also been seen कि company इतना ज़्यादा debt तो raise ना कर ले कि the company goes into bankruptcy or default. Also these things have to be taken into consideration, from which sources the company is raising money. It can happen that the company is using both equity and debt. So all these scenarios we need to take into consideration, but people call that using the retained earnings is the best scenario, because ultimately like when you are using the retained earnings, you need not depend on anyone. Okay, and like according to the pecking order theory as well, as a background pecking order, so on the basis of the sources of capital, I'm talking about the retained earnings, people call it as a best source, because ultimately तुम्हारा वो खुद का पैसा है जो तुमने सेव करा हुआ है, and you need not go for debt and equity. Debt can make your firm risky, though it has advantages also, like that we'll talk about. But still, if you're raising debt up to a certain limit and cross that limit, your firm can become more risky and can go to the verge of bankruptcy, right? Whereas equity, see, the second source it says equity, and the second it says debt, and third it says equity. Okay, because why the retained earnings I told you, debt I told you, क्यों नहीं? Okay, and equity may, because again the process is long. Like you have to file your papers towards SEBI, and SEBI can take 6 months, 9 months, and even like 1 to 2 years, because the SEBI might recommend you some changes, कि ये changes करो, so that can take a lot of time, and हो सकता है कि company के पास उतना time ना हो. So on the basis of the sources of finance, a firm can have the retained earnings, then a firm can have debt, and a firm can have equity. Okay, so debt is basically, debt covers you know bankruptcy. But what is the advantage of debt? Advantage of debt is like you get the tax deductibility of interest. Interest tax shield मिलता है तुम्हें, tax कम देना पड़ेगा simply. Or apart from that, you also, it maintains a discipline in the management, because the management knows that they do not have to take some extra kind of risky ventures, which increases the risk of the firm. And when the risk of the firm increases, the company will have to pay more rate of interest to the debt holders ultimately. Because the basic principle of stock market, or the basic principle of any of the markets or finance, higher the risk, higher is the expected return. So if the company is getting more risky, more amount of interest on debt will have to be paid. So it inculcates a discipline in the management. And equity has the advantage because ultimately, like people will be having access to the company, like people will be getting to know like about the company. Shares market में आएंगे, the liquidity of that company will increase. The price discovery would be done in a very good manner. But the negative drawback is because ultimately the promoter stake is kind of reducing in the company, right? And ultimately the liquidity can also be wrong for the company, because अगर liquidity बहुत ज़्यादा है, तो maybe the share price of the company will come down. Because the basic kind of rule of economics, जब scarcity किसी चीज की होती है market में, when the shares are scarce, the price will rise, as in case of diamond or the other metals or commodities, as we are seeing recently. But when the supply is very large, shares market में उस company के मतलब कि भरे पड़े हैं, in that case the liquidity will be more and the price can come down. In that case, the company might go for a buyback. The company might think that the price of my company is too low and my valuation is too low, but my company is like so fundamentally strong and I want to like have some more value for my company. Okay, in that case it can be like hurtful. Okay, so अगर हम debt and equity की बात करें like or in particular, तो अगर हम ज़्यादा debt raise कर रहे हैं, okay, so if we are raising like more amount of debt we are raising, तो हम कब तक debt raise कर सकते हैं? We can raise debt only till the point when your return on investment, which is nothing but equity and debt के sources में तुम्हारा पैसा बन रहा है नहीं बन रहा, or your return on equity, which is only on the basis of equity, like if you have purchased the shares of your company, are you getting a certain return or not? इन दोनों में से या दोनों must be greater than the cost of debt. Your cost of debt is nothing but the interest obligation, the interest rate that you are paying on your debt. So till the point when your return on investment, which considers both the sources of capital, that is equity and debt, or your return on equity is greater than your cost of debt, up till that point you can issue debt, and that will have a good impact upon the firm, because ultimately the value of the equity will increase. The equity shareholders will be happy, and when the equity shareholders are happy, the value of the firm will also increase. Until the point when your return on investment or your return on equity is greater than the cost of debt, the equity shareholders value will increase and the value of the firm will also increase. And if the value of the firm increases, your overall cost of capital, which is also called the weighted average cost of capital, will decrease, and that is what the firm wants. The firm wants the maximum value for itself and the minimum cost of capital. And what do I mean by the cost of capital? This we'll talk about in the subsequent sessions also, but to make it simplified for you, by the weighted average cost of capital or the cost of capital, and we also call it as the overall cost of capital, or the discount rate also we call it in certain scenarios in cash flow analysis and all those stuff. It is nothing but the minimum return that both the debt holders and equity holders are expecting from their investment. If I have given a loan to the company, then I am expecting a certain return on my debt. If I have purchased the equity shares of the company in the stock market, I want certain capital appreciation on that. Right. So that is nothing but your weighted average cost of capital. and that is what the firm want. The valuation should be maximum and the WACC must be minimum. But अगर डेट कंपनी बहुत ज्यादा ले रही है इस पॉइंट के बाद भी ले रही है, व्हेन दिस ग्रेटर लेस का साइन चेंज होके ये लेस देन बन जाता है, then the debt holders, then the equity holders also are at risk because the equity value is diminishing. The equity shareholders are getting less and the valuation is also getting affected. The valuation is coming down and the weighted average cost of capital is coming up. Why? Because the firm has become more risky. And when the firm becomes more risky, more would be the discounting rate or the WACC for the company. ज़्यादा return मांगेंगे. Because the basic principle of markets or any of the markets, higher the risk, higher is the expected return. So it can be dangerous for both the debt holders and equity holders. अब let's talk about the equity. अगर कंपनी के पास इक्विटी बहुत ही कम है तो ऑब्वियसली द इक्विटी शेयर होल्डर्स आर हैप्पी बिकॉज अल्टीमेटली मार्केट में शेयर ज्यादा नहीं है एंड लिक्विडिटी मार्केट में कम है, एंड जब मार्केट में लिक्विडिटी कम है तो शेयर्स का प्राइस भी ज्यादा है एंड इक्विटी शेयर होल्डर्स आर हैप्पी दैट दे आर होल्डिंग लार्ज अमाउंट ऑफ शेयर्स. नाउ इफ द प्रमोटर्स स्टार्ट टू डू ऑफर, नॉट द like the offer for sale, but we call it as dilution. Offer for sale is more used in terms of the IPO of the company, the OFS. And जब कंपनी लिस्ट हो जाती है एंड प्रमोटर्स को अपना एक्स्ट्रा स्टेक और बेचना होता है, in that term we call it as a dilution. We call it as a dilution. So if they're diluting their stakes, more shares market में आ रहे हैं, then the value of the existing equity shareholders can also reduce. In that case, the equity shareholders might not be happy in that scenario, right? So that is the situation that can also get, also like come into play. So we can see that there are both the drawbacks and advantages of debt and equity. Okay, and that is why they have to be taken into consideration. So this is the pecking order theory like which is talked about everywhere in top financial corporates. And if you're like planning to pursue a career in finance, like they are also like it would be talked about the pecking order theory. And this was in terms of the sources of finance. But when we talk about on the basis of the cost of capital, so on the basis of the cost of capital, KOSM करते हैं, your debt is first, then you have your retained earnings, and the last source is equity. And why is debt first? Because of the tax deductibility of interest वाला factor. Interest tax shield मिल जाती है, tax कम pay करना पड़ता है. Then your retained earnings and then your equity. And debt कब तक? Up to like this point only, when your return on equity or the return on investment is greater than the cost of debt. Okay, अब क्वेश्चन आता है कि retained earnings का cost and equity का cost क्या है? See, almost the cost of equity and the cost of retained earnings are almost the same. Due to a minor differences, your return on the retained earnings, or the cost of retained earnings, it might be lower as compared to the cost of equity. Okay, because देखो जब retained earnings का हम क्या करते हैं? Basically, like when we talk about the retained earnings, उनको हम why we are like keeping those REs with us to invest into some projects. And if the projects are risky, again the retained earnings cost would be high. And if the projects are less risky, the cost of retained earnings might be low. So blindly we cannot compute that. Similarly, equity. If the equity is being raised for the project, because company first of all equity raise क्यों करती है? Because company को पैसा चाहिए for expansion and diversification plans. जो retained earnings कंपनी के पास ऑलरेडी है वो भी कंपनी इज यूजिंग फॉर एक्सपेंशन एंड डाइवर्सिफिकेशन, और जो इक्विटी कंपनी जो मार्केट से रेज कर रही है दैट इज ऑल्सो बीइंग यूज्ड फॉर डाइवर्सिफिकेशन एंड एक्सपेंशन. तो व्हाई वुड देयर बी अ डिफरेंस बिटवीन द टू? ऑलमोस्ट दे आर सेम, बट आरई थोड़ा सा कम क्यों होगा? व्हाई? बिकॉज वो कंपनी का खुद का पैसा है, इन्वेस्टर्स का पैसा नहीं है, तो रिस्क कंपनी खुद का ले रही है, इन्वेस्टर्स का नहीं ले रही. दैट इज द रीजन व्हाई दे आर ऑलमोस्ट सेम मान के चलो, बट थोड़ा सा कम होगा ये आर द कॉस्ट ऑफ रिटेन्ड अर्निंग्स, आई मीन नॉट द फुल अमाउंट. ओके, that is why how we talk about your pecking order theory in terms of the sources of finance, and the second thing in terms of your cost of capital. Understood this much? Now let me erase extra part. Yeah. The third thing we talk about is a working capital or the dividend decision. Working capital, like what is your working capital? Working capital is nothing but the amount that you need for day-to-day expenses. It can be used to pay off your salaries of the employees, workers, wages for workers, your rent, your like electricity expenses, traveling expenses, driver van ki fees, all the things like which are used for day to day expenses, like are your working capital. तो कंपनी के पास इतना कैश अपने पास होना चाहिए हमेशा कि उसके दिन के खर्चे निकल जाए. ठीक है. Here we talk about your gross working capital, GWC, is nothing but your current assets of your company. And next you have the net working capital, is nothing but your current assets minus your current liabilities. Okay, so the net working capital is seen by a large number of the company management, corporates, analysts, and investment bankers. So they need to see that whether the company is having a positive net working capital. And when would be the company will having when would the company have a positive net working capital? The company would have a positive net working capital when the current assets are more than the current liabilities. And why it is beneficial to have always your current assets more than your current liabilities? Because ultimately the asset that you must have should be more than your liabilities. Your liabilities can be some trade payables, you might have taken some short-term loans, some outstanding liabilities. तो इनको pay off करने के लिए अगर कोई urgency आ जाती है या कोई emergency आ जाती है, in that case you must have sufficient current assets with you. And the best source of current asset is your cash. कंपनी के पास क्या डेटर्स ना हो, कंपनी के पास क्या प्रीपेड एक्सपेंसेस ना हो, कंपनी के पास शॉर्ट टर्म लोन्स ना हो, कंपनी के पास क्या इन्वेंटरी ना हो, कंपनी के पास क्या बैंक बैलेंस ना हो, कंपनी के पास शॉर्ट टर्म इन्वेस्टमेंट या मार्केटेबल सिक्योरिटीज भी ना हो, बट लिक्विड कैश हमेशा होना चाहिए. ओके, एंड दैट इज द बेस्ट. कंपनी के पास अगर कुछ है नहीं ना, लाइक इन करंट एसेट्स, बट द कैश इज सफिशिएंट टू पे ऑफ द करंट लायबिलिटीज, स्टिल द कंपनी इज डूइंग वेल. व्हाई? बिकॉज अल्टीमेटली कैश इज लिक्विड विद यू. तुम्हारे पास पड़ा है, तुम दे दोगे. ठीक है. आफ्टर कैश, like we can talk about the bank balances, because ultimately you can like withdraw the money from bank, or like you can do Paytm or Google Pay and like whatsoever it takes, but that also can take some seconds or some minutes. Sometimes like some network error can come, like in Paytm or Google Pay, or like you might have to go to the ATM and like from there withdraw money, so that time lag is there. Okay, and even your marketable securities also, it might happen that you want some money and all your money is locked in short term shares or like सिक्योरिटीज. ठीक है. अब वहां पे मान लो लाइक यू वांट सम मनी, तो तुम मान लो कि शाम हो रही है, मतलब कि 6 बज रहे हैं, 7 बज रहे हैं. एट दैट टाइम द मार्केट इज क्लोज. So at that time, like you'll be placing an after market order, and the next morning, like you'll be getting that money. So investments are liquid, but not so liquid. Immediate पैसा नहीं मिलेगा. Similarly, shares को अगर बेच के तुम्हारे मतलब कि डीमैट अकाउंट में पैसा आ रहा है, so that also takes at least 12 to 24 hours to get transferred from your broker's app to your bank account. म्यूचुअल फंड्स को तो सेटल होने में 3 से 6 दिन लग जाते हैं, एंड सैटरडे संडे बीच में आ गया तो हफ्ता लगा के चलो. सेम गोज फॉर द शेयर्स ऑफ द कंपनी एज वेल. फ्राइडे को रात को यू सोल्ड, यू हैव टू वेट फॉर सैटरडे, यू हैव टू वेट फॉर संडे, फ्राइडे नाइट also, and Monday morning like you will get money. And if some holiday comes in between, so that can also take Holi, Diwali, Christmas, Eid आगे बीच में, that can also hamper the timing as well. So that is also an issue. Okay. Inventories, हो सकता है you might not have a buyer for like for your inventories. हो सकता है buyer हो ही ना, तो मैं उस point पे like you wanted a particular buyer and the buyer is not available because like no one is waiting outside your office or like your factory. आप हमको अपना मतलब गुड्स हो गए या मान लो कि मतलब कि कमोडिटीज होगी हमको दे दो. Right, for that also like you might have to wait. Debtors might not pay you on time, and like if you ask them for the purpose of like immediate payment, like you might lose your customers also. Right. Prepaid expenses तुम already दे चुके हो, ठीक है, तो तुमको वो तो मतलब कि मिलेंगे नहीं वापस. So all these things are important, but cash is the most important. And if this value is negative, if your net working capital is negative, it might mean that your current liabilities are more than your current assets, and it is a risky situation for the company. Okay. Also, people say that the net working capital can also be negative when your long-term sources of finance are used for, or long-term sources of finance are used for financing the short-term, or short-term sources of finance are used to finance the long-term capital. So that is something different. Like we'll be talking about that in the net working capital chapter. That is something different. But this thing you need to know: that current assets must be more than your current liabilities. Okay. Then dividend decision we know. But how much dividend? Like we talked about dividend in the previous session. What exactly is the dividend? Because out of the profit that the company makes, so out of that profit, some amount is given as the dividend to the shareholders, and some kind of amount is kept as your retained earnings. Right? So dividend we know, and then how much dividend to be paid, how much dividend not to be paid, it depends upon the company's discretion.